What's going on? So it's been a bloody weekend in the markets. I thought I would make a video talking about my trading positions as well as how I'm playing the markets, and then some lessons I've learned from trading the last few weeks. By the way, everything I say in this video I've already said on Twitter and in my blog/email newsletter, so follow me there if you haven't already. So for those unaware, I basically had a short position on a basket of altcoins, mainly alt layer ones like Cardano, Solana, Polkadot, Cosmos, and SushiSwap as well. My reasoning for this short position was because I was very bearish the macro environment. I'm not a macroeconomist, but just from the research I've done following other professional investors, it felt like the macro environment just not looking good. You've got the Federal Reserve just starting quantitative tightening, raising interest rates, inflation out of control, stocks overvalued, the dollar strong, Asia in a recession, Europe in a recession, US probably entering a recession very soon. It's just not looking good right now. So that's why I put on the short position initially as a hedge, because I still own some Ethereum. These are long-term holdings. I don't plan to sell those anytime soon. So initially it was a hedge, but then then it became more convinced of it. So yeah, when the bad inflation numbers came out on Friday, I increased that short position, and then on thinking that it would be a bloody weekend with the target of closing that short position Monday through maybe like between Monday and Wednesday before the next FOMC meeting. Like I definitely didn't expect the devastation to be this bad. So on Saturday when the markets went down, I increased that short position. Sunday, increased that short position. Today, Monday, Celsius going insolvent, markets just being so oversold, I closed the short positions. Personally, I could definitely see a relief rally coming up, but I'm not betting money on that. Yeah, if Ethereum goes back up to like 1700 or something, I'll probably start DCAing into another short position on altcoins, but because I definitely don't think the bottom is in yet. I'm bullish crypto long term, but I think Ethereum's going to hit $800 before it hits $10,000. So yeah, that's my reasoning right now. I've been trading, by the way, on DYDX, which is a decentralized perpetuals trading platform on a layer 2 on Ethereum. I like it a lot. I think Celsius going insolvent is a testament to the value of decentralization, but the only downside is that there are only perpetuals and the token selection is relatively limited. So I'll probably start exploring other options too if I want to do something more complex. So I also thought I would talk about some lessons I've learned from trading the last few weeks. I mean, I'm a total noob trader, so probably if I make this video again in like 2 weeks, it'll probably be totally different. But yeah, these are my lessons. So the first is, if you're just making a macro trade, then diversify your position. You don't want to be overexposed to the specifics of any one token. The next is learn to size your positions accordingly or appropriately. This is one of the most difficult parts of trading, I think, and it's definitely something I haven't figured out. But I think ultimately, like I would stay away from leverage. But if you do use leverage, you always need to have a stop loss. You don't want to get liquidated. If you get liquidated, your account goes to zero. So like, just avoid that as much as possible. Yeah, I mean, like, if you're losing sleep over your position, then or like you're tempted to panic sell, then your position size is probably too large. And that's the main problem with having a position too large, because it makes it way too tempting to paper hands panic sell at a loss. And like, even if you're right in the long term, the volatility can eat you up in the short term. And it's nice to be able to DCA and add to your position when it goes against you. So yeah, don't put on too big a position. Also don't put on too small a position too, because that can be a waste of time too, unless you're just learning. So yeah. Next point is, well, take profits. I think anybody who's held through this entire bull run has definitely learned the importance of taking profits. I should have taken profits on my Cardano short when initially it went up 20% in my favor. Just take profits along the way. Like, yeah. Okay. The next thing is, like, learn when to step away from your computer. I think it's so easy when trading to just be so fixated on the charts and just like these micro optimizations and then over trade, and so much of it is a waste of time, and it can just be like at best a distraction, at worst like usually I'm no better off doing this kind of thing. So like, learn to step away from the computer, every now and then. Go outside, take a break, and just don't lose sight of the bigger picture. And yeah, just do something more productive than just staring at prices all day, unless like that's your specialty or something like that. Okay. The last point, which I think is the most important lesson for me, is to always be focused on the next trade and the next opportunity. Don't just be thinking about like your past trades, like your prior peak net worth, like all the money you lost, all that. There's always opportunity out there, and if you're just constantly fixated on the past, you're gonna miss it. There's a famous basketball coach who coached Michael Jordan and some other superstars, and apparently he said what separates the best athletes from the rest is that the best are always focused on the next play, the next shot. They're not just thinking about the past. So yeah, like the trade of a lifetime comes every 6 months. It's always there. There's always opportunity out there. The world is always changing. There's new technology, new data. The people who lead the way are the ones who seize that and move forward, not the people just thinking about how much money they lost and thinking about the past and all that. So yeah, I mean, like, there's another famous, very famous investor who said that every day he wakes up assuming his positions are wrong. And yeah, like, that's kind of the mentality you need to have. You got to constantly be adjusting, seizing the next opportunity, and don't get emotionally attached to any one particular view or conviction. I think, like, it definitely was a mistake for me not to sell that remaining Ethereum. I was convinced that Ethereum was going to go down to $1,200, $1,000, but I didn't sell because I was emotionally attached. So definitely a lesson for me to be more rational about it. And also, like, I think in general it's so easy to have opinions, but if you're not like putting your money where your mouth is and like actually making the trade, then like how much conviction do you really have? So maybe I'm saying this about my Ethereum when I said, oh, Ethereum's going to go to $1,000, whatever. At the end of the day, I didn't sell it. So either my conviction wasn't as strong as I believed, although I did at least profit off it to an extent from the shorts, or I was emotionally attached to my tokens. Either way, that's a problem. But I'm not going to fixate on that because it already happened. Not going to fixate on all the money I lost. Focus on the next trade, next opportunity. I'm working. Yeah, right now I have more free time, so I'm going to be also working on like my own project as well. I've got, but that's still early on. But yeah, I'll update you guys as that progresses. And yeah, that's it for this video. Let me know how it's been going, and stay safe out there. Enjoy life. All right, catch you in the next video. Peace.